Hey everyone, and welcome to today's webinar. I'm Remy Rosen, VP Marketing and AI Evangelist at Sedric, the AI first platform for marketing and communications compliance. And today I'm joined by two stellar expert panelists, Michael Lamm and Dr. Jermaine Kimble. Michael Lamm is the co-founder and managing partner at Corporate Advisory Solutions, a leading investment and merchant-based firm specializing in the accounts receivable management industry. He's completed more than 145 M&A engagements, totaling over $2.75 billion in deal value. Michael leads CIS's M&A, valuation, and strategic advisory work, guiding clients through growth and exit strategies. He also serves as FINRA arbitrator and holds Series 79, 63, and SIE registrations. Thank you, Michael, for joining us. And next we have Dr. Kimble. Jermaine is a compliance executive with over 25 years of experience in financial services and fintech. He's led compliance and consumer protection programs at organizations including Equifax, Bank of America, Merchant Services, and Block, including Square, Cash App, and Afterpay. As founder of Kimble Consulting Services, he advised major firms on regulatory and strategy risk management. Today, he serves as Sedric's Director of Compliance Product, where he blends regulatory expertise with AI innovation to advance responsible compliance. Jermaine, thank you for coming. All right, let's kick it off. And everyone who's with us today, if you have any questions, please put them in the chat and we will get to them at the end of the webinar. All right, Michael, let's start with you. Let's set the stage. What trends are currently shaping M&A activity in the ARM industry?
It's a great question, Remy. There's really three things that are driving M&A activity right now. Number one, economic pressures. We're seeing rising delinquencies across every industry or asset class in the market. The new tariffs are fueling financial stress, and we're just seeing more and more a consumer that's more and more financially just troubled in trying to manage through how much food, gas, everything costs today, which is leading to opportunities for growth in the debt collection area. Second big item is labor costs. This industry tends to thrive on labor, both domestically and internationally. And when I go across the country and I speak to so many players in the space, their biggest issue is finding and hiring people and keeping their people, in which is becoming a big issue. Third area is technology. This industry is being woken up to technology in such a significant way, and companies, collection agencies, debt buyers, law firms, they're trying to figure it out, and that's creating investor interest and demand in trying to help accelerate the technology changes that are in the market to create a more well-fueled, technology-fueled collections type business, and that's creating more M&A activity across the board.
Yeah, that's great. Can you tell us who's driving most of these deals right now? Is it strategic buyers or private equity or consolidators?
You're seeing a mix. As I've said in other webinars, I've never thought I'd be spending more time with Silicon Valley investment funds looking at debt collection. It was definitely not when I look back 25 years ago when I got in, I didn't expect to see what we're seeing today. So definitely a lot of venture capital, private equity, and on the strategic side, they're obviously out there. There are other types of companies, BPOs, CX companies that are looking to get into collections as well.
Yeah, that's great. From your perspective, from what you're seeing, what's separating those who are struggling to get noticed or struggling to sell from those who are getting strong valuations?
Diversified client base is a big one. Those that are on legacy technology, Remy, is a big area. And those that are not leveraging nearshore, offshore. Those are companies that are not getting attention in the market. The last item, which really covers where Sedric plays, is on the compliance and data security protocols. If companies are going through or experiencing data security related issues, cyber breaches, ransomware attacks, or they're not focused on agent compliance in the with best in class technology, the buyers recognize that. They see that as a weakness and they get concerned by it.
Oh yeah. How heavy is that, the tech stack? How heavy does that play into the valuation?
Significantly, because the last thing an investor wants to do is walk in the door, buy a business, and then find out that they've got to then infuse millions of dollars to upgrade the tech stack.
Oh
They're
yeah.
expecting to walk in with a team of people that have already kind of thought through some of these dynamics and have invested into the business. If they're coming in and having to do all the investments, they're going to likely pay a lower multiple, lower value for the company all in.
Yeah, that's great. Jermaine, I'm gonna push it to you. Let's talk about what we're seeing. What kinds of tech or automation investments have made the biggest impact in operations that you've seen?
Centralized data lakes. Having all of the information in one place, one point of truth across all of the org, ops, risk, and compliance. Seeing a lot of investment to ensure that these areas aren't as siloed as they once were. So having that one source of truth is, like the end goal. So this way we know that, within the organization, we're all on the same page. We all have they have the clean IDs and event logs that all of us can reference.
Yeah, that's great. Have you seen any instances where the AI has actually helped with make the business more appealing to potential buyers?
Absolutely. So using the AI, you have a lift in QA automation, speech tech analytics, tied to coaching workflows, fewer escalations, fewer remediations.
Yeah, definitely. No, that's great. Michael, I'm going to go back to you on this one. Let's talk about AI and best-in-class operations. How have buyer expectations evolved regarding AI and QA capabilities? Are these now considered table stakes?
It's becoming that way, Remy. The problem, though, is it's so new. And it's also driven by what the client's view is of AI and what they're willing to allow the collection agency, debt buyer, law firm to leverage in the market as well. And that's been a big issue because I think on the vendor side of the equation, these companies want to leverage AI. They want to do things more real time and with compliance in AI. I think they're challenged with what their clients will they'll allow them to do. But I do think it's becoming so critical that the companies in the space are working with the leading vendors and the ones that are forward thinking in order to drive their margins and what they're trying to accomplish because these businesses are trading typically on a multiple of adjusted EBITDA. And if their margins are not strong, the buyers are going to be asking, why aren't they leveraging other AI workflow tools to number one, eliminate if they can people, but also make them more efficient and faster in their engagement with the consumer.
Yeah, that's great. So let's go a little deeper. What does best in class look like from an M&A perspective?
So, few key things. If they're growing top and bottom line, I'm not saying they're going to be growing like a tech startup, growing 50, 100% a year, year over year. If these companies are growing 20%, 30%, that's a huge win for this type of an industry. Number two, having low levels of client concentration. Businesses that have 60, 70% client concentration with one big bank or cable company or telco makes it really difficult to get a deal done. Doesn't mean you can't get a deal done, just makes it more challenging. Third is people. Even though we talk a lot about technology, they don't run by themselves. So management becomes very important. The tenure of those people, but also their experience in doing M&A, raising capital, and growing the platform becomes very important. And lastly, the technology, the tech stack. Again, we talked about that earlier. If they don't have modern technology or they're not making plans to invest into AI in some capacity or haven't thought about bringing on a data scientist or a data analyst to help them with their workflows, they're missing the boat.
Yeah, that's great. So let's talk about missing the boat. Jermaine, back to you. What practical advice could you give to companies in the arm space looking to modernize and avoid being seen as lagging behind?
I would say map critical journeys. Automate as much of your controls as possible and do it at the point of action, not just, after the fact. Standardize your data schemes and IDs. So use the tools that can ensure your data is clean. That's a lot of delay and lag is in ensuring you have good data. And start with needle movers. I would say, QA automation, complaints triage. Complaints triage is huge considering the rise of CFPB complaints today, and publish quarterly ROIs.
Yeah, that's great. Are there any specific technologies you would recommend or steps that you would get started with for that?
I would definitely recommend an AI tool that can assist with the automation of your complaint handling. So much time and effort is, wasted because a lot of it today is manual. A complaint comes in, you have to verify the validity of the complaint, if it's a violation of your policies, procedures, if, the gap may be with a third party or internally. So something that can help, you know, automate that process as much as possible. You'd save a lot of time, a lot of effort, and a lot of headaches when regulatory agencies do come calling.
Yeah. Michael, are there any techs that stick out that you've seen that really sweeten the deal?
I mean, everyone's talking about virtual agents, Remy, right now, and I'm sure, I don't know, Jermaine, you're hearing the same thing, but that is a big topic across the board, along with all of the back and forth around text messaging and also text to pay has been a big discussion too. They want to make it seamless and easy for the consumer to make payments. So a big concern, we talked earlier about data security, cyber breaches, and they're hitting this industry just like they're hitting every other industry, and it's painful. But a lot of it's coming through, their websites, their pay portals. They're having issues with people getting access to their data, and I think that's a virtual agent and text to pay are big topics right now for folks.
Yeah, that's great.
I,
So that brings us to the. Oh, sorry, Jermaine, did you want to add something to
I was just saying, I agree. I agree wholeheartedly. It's
that?
definitely with the virtual agents. I've heard a lot about that.
Yeah, it's a huge
And they're
buzzword.
getting pretty good. The virtual
Mhm.
agents, like they're becoming more and more lifelike. It's mind blowing how good some of these are getting.
Yeah, it's creepy. I do like it when they announce themselves as a virtual agent, though, and so you feel a little more secure, and then you can always transfer to a real person. Let's talk about preparing for an exit or an acquisition. Michael, what should owners do 12, 24 months before pursuing an exit to really ensure they're well positioned?
Number one, build your advisory team early. Get the right people around you that know the process. Attorney, M&A advisor, CPA, financial planner. Get those people involved early and help them discuss what your plans and objectives are. Number two, you got to figure out valuation. There's no point in wasting time going to the market talking to potential suitors if you don't have a good handle on value. We tell groups all the time, figure out how your business is going to be valued before you really do anything else. And then another key item is around getting your financial house in order,
Yeah,
whether you've got audited or reviewed financial statements. Do you have any skeletons in the closet related to your financial performance that need to be addressed or figured out? Those tend to be my top three, Remy, because if you don't figure those three things out, it's very unlikely you're going to get to step 5, 6, 7, and 8 in order to get things moving.
yeah, definitely. I like that you said skeletons in the closet. Let's talk about that. So, what common red flags appear during due diligence, and how can technology help mitigate those risks?
Compliance, compliance, compliance. We're in an industry that is heavily litigious. You've got consumers, ambulance chasing attorneys going after these companies every single day. And oh, by the way, you got the federal and state government also overseeing it. So your compliance side is where usually the issues come into play. Whether you had a TCPA lawsuit 5 years ago, a state investigation, an audit because of trust accounting issues, those are things that you can't just push under the rug and say, oh, it happened a few years ago, let's not worry about it. You got to clean it up, document it, remediate it, get it into a position where you're able to share with potential investors when they're diligencing you, what happened and why and how you fixed it.
Yeah, that's great. Jermaine, over to you. From an operator's perspective, how far in advance should companies begin preparing their tech, data, and processes for acquisition?
Very aggressively, 12 months, but I would recommend somewhere between 18 and 24. You're able to show trend lines, stability, and control durability.
Yeah,
The
that's great.
longer you push it out, the better.
Can you give
Remy,
any
one other
tips?
thing that,
Yeah,
but one other thing to add that Jermaine was saying is that inside the data, right? Like when they're doing due diligence on a company, they're looking at the tech companies that they bring in for the due diligence. They're looking at call notes. They're looking at consistent trends in what's happened within the portfolio and why certain things have happened that have led to 5,000 more disputes in a particular 12-month period of time, whatever the number is. Those are real items that get looked at and uncovered, and it's not as if they're trying to make it more challenging to get the deal done. They're just trying to box in any potential risk.
Yeah.
yeah, and that makes sense. Um, Jermaine, I'm gonna push you a little farther on this. Not just how far in advance, but what are steps that operators could really do to prepare their tech, data, and processes for acquisition? Can you give some suggestions there?
Yeah, I'm going to further piggyback on what Michael was saying that if it's not documented, it didn't happen. So your
There you go.
policies, SOPs, your RACEs, change logs, all of it must be current, all of it must be ongoing, it must be, top of class. I would also say maintain a living evidence library, QA scores, corrective actions, complaint outcomes, control tests, model reports. All of these things are, it'll be a focus of contention if they're not up to snuff. And finally, I would tie QA and compliance metrics to business outcomes, chargebacks, recoveries, to show enterprise value and not just, risk hygiene.
Yeah, that definitely makes sense. Can you share with us any lessons that you've seen or you've learned about readiness, especially when it comes to compliance, documentation, or QA data?
Absolutely. So the one of the things, in dealing with not just for acquisitions or for investments, but in dealing with regulators, it is huge to have a highly documented process for your compliance program. And what I find with a lot of agencies is that a lot of the compliance protocols and programs, procedures live in folks' heads. And, when it's time for that level of investigation, it's, you have to speak with someone, or this person may be out on vacation. And I'm as, a regulator, I'm looking for your documentation. I'm not looking to have to schedule a Zoom call to find out how or what happened on the 5th of last month. All of this should be highly documented. So that would be my one piece of advice for anyone is that your program should be, you should have binders and files and backups of your backups.
Oh yeah,
I
definitely.
want them to I want them to not think about compliance as window dressing or something they can just have a go on chat GBT, Remy, and produce a complaint log or something that they could just say, oh, here we go. Here's something the buyer wants. I want it to be real, auditable, a trail that they can show somebody to say, here's what happened, here's how I fixed it, and here's how we pushed it out to the rest of the company so it doesn't happen again. Versus it being all up, as Jermaine's saying, in someone's head that then they can't document it anywhere. That's where real issues start coming into play in due diligence on transactions when it can't be fully documented. We see that issue pop up a lot.
And you know what? To go into that a little further, a lot of companies are scared to document their issues. They think that it shows, potential troubles versus, remediation. I would rather see that you found the issue, address the issue, and it won't happen again versus you try to tuck it under the rug and hope we don't uncover it.
Exactly. It's so painful when they think that they're just trying to keep it and say it's not an issue, but they should just address it head on.
Mhm.
Completely agree.
Definitely. Michael, you mentioned ChatGPT. Let's segue into AI. And these days, when people say AI, usually they mean LLMs or ChatGPT. So tell me, what role do you see AI playing in the next wave of M&A and operational transformation?
I think it's
That's for
going to
both of you.
continue. Yeah, I mean, from my lens, I see it helping to make the process more and more efficient. from how a data room is constructed in terms of how interactions are happening between a buyer and seller, but also when it comes to helping to uncover any potential problems in the business, because a lot of this is company. I think AI and the modeling that's coming through going to be something that's going to be leveraged there to help these companies figure out where their issues are before we go out to market.
Yeah, definitely. Jermaine, what role do you see AI playing?
I think AI will serve as the operating system for QA and compliance. So, not to say that it's going to take the place of a compliance officer, but it will be the means in which the work will be done. So, continuous monitoring, it's a 24-hour cycle. And to have an AI that can constantly keep your program up to date, keep you aware of what's going on would be, essential. Auto coaching, instant evidence, all of these things can be managed outside of the 9 to 5. I think buyers will play a premium for provable risk reduction and, having an intelligent routing system that raises liquidation without raising complaints.
Yeah, that's great. Last question, looking ahead, where do you guys think that forward-looking receivable firms should invest today to remain competitive over the next 3 to 5 years?
I want them to spend more and more dollars on compliance and on cybersecurity. I really do. These smaller companies in the market are so exposed, especially those that are in healthcare. It's mind blowing to me, and I feel like if they're gonna put money to work, it's to really make their compliance and cybersecurity top notch. And I think there's a lot of additional work that needs to be done there in this industry.
Yeah, definitely. Jermaine,
I would say QA and compliance automation. Anything that, and not just any AI there or automation. There's a lot out there, but is it auditable and is it functioning in real time? So, taking those extra steps to ensure that you have a real time auditable that you can trace back, back to our original topic of having documentation and testing and everything, something that you can press a button and have your reports drafted, I think would be, mandatory going forward.
yeah, that's excellent. Gentlemen, that's all the time we have for today. I enjoyed it very much. Thank you both for coming, and we will send out the recording to everybody afterwards. Thank you so much. Until next time.
Thank you.
Thank you.